Right, sorry, start again. Welcome everyone. Sunday evening. I hope everybody's well. We have got one hell of a week this week, and I'm going to go through lots of things which are coming up. I'm going to go through, why it matters, why we've got to be careful, and obviously, hopefully, everyone's going to understand why you got to be aware of macros. All right, so you guys know love macros. It's something that I've gone into in a heavy detail. And obviously I've got, I'm still only like touching the, surface. So there's a few people who I'm trying very hard to get a meeting with. I'd love to, so that I can obviously improve my knowledge, in regards to obviously, macros. So starting off, just to make everyone aware, if you do, I'd recommend everybody, obviously, having some kind of economic calendar. There's investing.com. I mean, I've also got access to a Bloomberg terminal. I don't maybe recommend that because obviously it's quite expensive. And there's a Forex factory. It doesn't really matter which one you use because obviously data doesn't really change. But we have got a crazy week this week. All right, it is crazy. And if you're not aware of macros, what I tend to do is kind of navigate round them. All right, so tomorrow's going to start off, a little bit slow. All right, but obviously we've still got obviously Chinese data. What's that gonna affect Aussie? All right, so China key trade partners with Aussie. I've always, said to everyone, look up trade, because it is important. All right, and then obviously we don't trade CAD, but obviously we've got inflation data for CAD. We've got some manufacturing data. One thing that we've got to be aware of this week, although we don't trade oil, we've got to be aware of it because what does everything run off of? All right, everything runs off of oil, right? So everything's more expensive. Production, transportation, everything is more expensive because of the current price of oil. All right. It doesn't matter what is, happening, why it's happening. We've just obviously got to act on how obviously markets are perceiving what is happening. So it's a really interesting week this week. We've got obviously lots and lots coming up, but the main things are the interest rate decisions. We got an interest rate decision for Aussie kicking us off Tuesday, supposed to raise interest rates. Obviously, that is going to, benefit Australia potentially. We've then got ADP. So Tuesday we really start. Wednesday we got inflation data for euro. We've also got an interest rate decision for the United States. I'm going to go through this in a bit of detail. I'm going to put both the PDFs in a circle so you can watch that. I might even go live if I can Wednesday. I should be able to on Wednesday. Then we've got obviously, unemployment, Aussie. We've then got Japan interest rate decision. It's going to be more about what they're speaking about as opposed to the interest rates. It's going to be about the policy statement, I think personally, and the press conference, as opposed to obviously, the actual interest rate decision. We've then got some unemployment rates supposedly to rise for the United Kingdom. That doesn't surprise me. One thing I always say to everyone is, whatever country you're in, whether you're in the UK, we've got some guys from Europe, you should have a good idea of how your economy's doing. Sorry, my headphones have run out. Can everyone hear me? Okay. Just put yes if you can still hear me. Yes, okay, cool. Right. So yeah, we've got to obviously, be aware of everything that is, happening. So for example, my partner's got obviously a 19-year old, obviously he's, struggling to find a job. All right. And obviously I think that's pretty fluid, for everyone. We've then got obviously interest rate decision for the UK. We got an rate decision for Europe. It's an active week this week. We got something happening every single day. Yeah, it's pretty crazy. Plus, we've got obviously all this rubbish, we'll call it, going on, in regards to Iran and the US and Israel. We've got loads going on, and we've also got something very, very interesting. So I'm going to briefly go over this because I do think you guys are going to have to read the PDF. But obviously, we got something called triple witching and quadruple witching. What is it? All right. In the financial markets, there are certain days where large numbers of financial contracts expire at the same time. These contracts are called derivatives, which are financial instruments used by institutions such as banks, hedge funds, and investment firms to manage risk or speculate on price. So what they are basically is contracts on stocks, stock options, stock index options, and stock future options. All right. Now, you guys can obviously have a flick through, but one of the main things, when do these events happen? All right. They happen they only happen four times a year on the third Friday of the following months, March, June, September, and December. All right. So and then the only reason I'm explaining this is, it's not something that we've got to worry about, but obviously it's, something that we've got to be aware of. Yeah. All right. So I've made this up. Key takeaway for traders. Markets are influenced by many different factors, not just technical charts or economic news. Institutional positioning and large financial contracts can also influence short-term price movements. By understanding events like triple witching and quarterly derivative expirations, traders can better intercept sudden market movements and avoid assuming every movement is caused by new economic information. All right. And so this is what everyone's going to class as their, market um, manipulation. All right, so we don't have to go through it tons, but obviously you do have to be aware of it, as obviously, it, happens because lots of these contracts are going to end and it's going to affect, the European markets, US markets, UKK markets, because yeah, there's going to be some, money loss because you can guarantee that obviously that no one was expecting everything to kick off as much as it has. We've got obviously, if we look at this on a daily, we got pound down, we got euro massively down, we got Aussie around about break even. But obviously, look how strong the dollar is. All right, no one would have anticipated this. Now, moving on to the dollar swiftly. All right. Yeah, if we look at it on a higher time frame, which is one thing that I've not even bothered looking at for a while, but obviously we need to be aware of it now, all right? Because we have cleanly last week broken through this previous, areas of kind of resistance here, all right? So it's very, very, subjective to obviously what the data is gonna come out, how, yields are going to perform. That they're obviously coming into a bit of resistance now, but obviously look at the last 2 weeks of yields. They've, flown. And then we've obviously got, stocks which are starting to take a dive. Now, don't be alarmed by, stocks, taking a dive. I'm just surprised it's taken this, long for obviously it to really, really happen. So because obviously, the news, the worry, the panic that's obviously happening, we've got to be aware of this, and obviously we've got to be aware. Yes, like I've said, how much more expensive transportation is, how much more expensive manufacturing is because of oil. All right, it's going to hit everything. And obviously the worry, no one's going to be looking for this, safe, investment in any companies. You've got normally stocks like Apple, Tesla, I normally keep an eye on here, massively, down here. You look at this week on week this year, started the year obviously, started the year here. It's dropping, hugely. And obviously, I could see this continuing too. And obviously, most of the top stocks, so obviously, where these potential stocks, most hedge funds might hold them as a bit of a, kind of a, stock, safe haven. They're obviously that's not happening, so yeah, we're obviously not really worried about the stock market. Let's just have a quick look at Bitcoin. Everyone's like, yeah, look at this weekly on Bitcoin, blah blah blah. Bitcoin could do anything. All right, it's very, very unpredictable. So because it's not backed up by anything. It's backed up by hope. Hope and mathematical statistics of obviously halving should increase the price of any asset if you take some off the table. So right, we're going to go through here. Why does this week matter? And obviously, I'm going to put this in the group too. All right. Well, why this week matters for FX traders? This week is one of the most important macro weeks for currency markets. Like I explained, several major banks are making interest rate decisions within a short period of time, where multiple central banks speak during the same week. The FX market can become extremely volatile because currencies are consistently being priced based on interest rate expectations. All right, so I'm not going to go through all of this, but obviously all the pairs that we trade are going to be hit pretty hard, right? Why is the Fed in a bit of a difficult position right now? Normally, central banks raise interest rates when inflation is too high. All right, they lower interest rates when economic growth begins to slow. However, the current environment is unusual because inflation is still above the Federal Reserve's target. Economic growth has started slowing. Energy prices have been rising, oil, all right? And global geopolitical risks are still rising. Right now, this is the word that everyone hates, stagflation. This creates a potential economic scenario known as stagflation, which means slower growth but still elevated inflation. If this situation continues, the Federal Reserve may be forced to keep interest rates higher for longer than the market expected earlier in the year. For traders, this creates uncertainty. All right. Oil prices and their impact on the FX market. Oil is quietly becoming an important driver of the global economy again. All right, when oil price rises sharply, it can impact many different markets because energy costs affect almost every sector of the economy. Rising oil prices can lead to higher inflation, increased production costs, slower economic growth, changes to central bank policy expectations. For currency traders, oil can also influence specific currencies, CAD, yen, US dollar. All right. So lots and lots to go through. Right. I've gone through obviously the options in a bit of brief because obviously I don't want to bore everyone. One of the other key things, the return of the inflation, narrative. Everyone's going to be speaking about inflation, right? Throughout much of last year, markets believed inflation was steadily falling. However, several developments suggest inflation pressures may be returning. These include rising oil and energy prices, global supply risk, continued geopolitical tensions, stronger consumer demand in some economies. All right. Key takeaways for traders. FX markets are not driven only by technical charts, they're heavily influenced by macroeconomic forces such as central banking policy, inflation trends, commodity prices, institutional position, and global economic expectations. Traders who combine technical analysis with macro understanding often gain a clearer picture of market direction. All right. So we're, what I don't want to do is just obviously blow everyone's brains out here. All right. But obviously, I want to explain, why and how we, kind of navigate the markets completely different to your average technical trader who draws a trend line on and looks at a little bit of news, but their trend lines, key levels, fair value gaps. All right. What I like to do, and you guys who have been in here a lot on a Sunday evening, is I'd like to obviously make sure that I know kind of imagine I'm sailing the ocean and I'm navigating my route through, so obviously we're navigating through the week as to obviously what we need to watch out for, why we need to watch out for it, and when we need to watch out for it, so that I always do this terrible drawing, right? Imagine we're a surfer. Yeah, right. This is our board here. It's not easy to draw. We're going to give him some longer hair if you want. All right. So what we want to do, let's just make it a bit smaller. All right, is when news comes out, all right, they create waves, yeah? Right. So we want to make sure that we're on this wave here. All right, and we're surfing this no problem. All right, because otherwise, if you don't keep an eye on how the news works, the wave happens here, and then you just crash out, and then it's over. All right, so always think about it like that. I'm sure my terrible drawing will always jog everyone's memory, but obviously, yes, you want to wait for the data for almost like markets to show their cards, you know, before we then hop in, because there's always an opportunity after what markets tend to do. News comes out, they'll drop, they potentially might drop, we might trigger here, and then it's off, So that's obviously what we are kind of looking for here, and obviously why we can all hold our hands up here. We don't get caught, stopped out very many times. All right. And this is why. All right. Because we're staying on the right side of everything, and obviously we're going to make sure that we ride these waves correctly. All right. So, dollar, where am I expecting it this week? All right. Well, no one can obviously really call it. However, it wouldn't surprise me if we were up at these kind of levels here. So let's have a look at this. Potentially 1015. I'm going to predict 101500 to 102 potentially. All right, all depends, So they do have a tricky job on their hands, like everyone does, because it's, if you imagine whatever you're importing, exporting, transporting, it's more expensive. All right, right now because the price that we were buying it, I don't know if anyone. I mean, I drive a Range Rover. Normally it costs me about 120 quid to fill it up for, from empty to, full. All right. And it doesn't normally last long either. But obviously, I think I filled it up on Saturday and it was like 140. All right. 140 to 85. All right. I'm incurring a £25 cost. All right. It doesn't, I'm not like, tearing my hair out. But obviously, if you're transporting anything and you're doing lots and lots of, work in regards to it, it's gonna hurt, because you're gonna be paying a lot more. So these are obviously all things we need to be aware of. Yields are also the one. I'm going to keep this marked up, but I am interested in it. If yields breaks, through this, that's crazy. When we also look at the price of where the dollar is, dollar hasn't been at this price since May last year. All right. May last year was when it was, right there. All right. So almost a year ago. All right. So we traded all of last year below here. And obviously it is flying. Now, one thing I also want to go through as well is gold, and why I really like this is I've been calling it out to you guys for ages. All right. I wanted gold to come back into this area here. Yeah, this area here. All right. And that's exactly what has happened. It's almost like bottoming it out. All right. We called it, and saying that we wanted it to come back here when price was here. It's tapped it once, it's held. It's tapped it a second time, it's held. I want to see what it's going to do tomorrow. Because if this holds gold, it could be a great time to buy gold. Because remember, normally in, war and times of worry, gold will hit an all-time high. All right, it has for its whole entire duration. All right, this is the whole history since 1971. All right, since its whole history, it's always gone up, and obviously we are at a point now where we've got a terrible, terrible worry going on for everyone all over the world. It's not even confined to one area like Russia, Ukraine, or Israel, Palestine. It's global. All right, it's a global worry, and I am expecting gold, yes, to obviously hold this. I'm really, really happy where it is. I'm happy that it held, and obviously, yeah, I want to see it kind of consolidate a bit tomorrow, and then I think we should be then targeting these areas here. All right. So gold is in a very, very exciting spot. And it might be worth if we have a runner, tomorrow might be worth us, taking that chance, drawing our stops to break even and just holding. All right, so that's might be something worth kind of looking at. So yeah, does anyone have any questions? Like I said, I'm going to obviously put both of these PDFs in, so you can take your time, you can go through them because I understand that lots of you obviously won't have heard of triple witching or quadruple witching, and obviously how options are going to impact us. But obviously, like we're looking at the stock market anyway, the stock market impacts us, yields impact us, where money flows impacts us. So we've got to be aware of everything. To be a good trader, you got to understand everything, all right? That's why I don't ever put anyone off, learning about anything. All right. I don't care if you've learned a strategy on, head and shoulders, if you trade ICT, if you trade, break and resistance, if you trade stocks, crypto, uh, commodities, I don't care because to be good at everything, to be good at anything, you got to understand everything, and then obviously you can then make your mind up. Right, what, I like this, I understand it. I like this, I understand it. All right, but you can't expect to be brilliant at this and not understand everything. So but obviously, macros, they can be a bit complicated. I totally understand. I've probably blown everyone's brains out tonight, so I apologize. But obviously, I do think it's important that we all understand that it is, news and expectation that will create these moves here. It's not the fact that there's a fair value gap or that there's the double bottom or, you know. So yeah. Right. Let's go. Some of these questions. Akash, hi. Do you think DXY will continue to rise at market open or maybe pull back first? I mean, nothing's changed. All right. So it wouldn't surprise me if gold gaps up. That wouldn't surprise me, but we'll kind of have a good idea. I think dollar. Let's have a look at it here. So I think there's a reason it's stopped at 100 500. Right, for anyone who's new here, I have every 500 marked up, and I recommend you do too. When it kind of tests, it struggles a bit, and then so I don't know. Dollar, I don't know this week. It's there's gonna be we got to think of all the new hype and expectation of what's gonna happen, because obviously we've got an interest rate decision. It's a pretty important one. We can obviously analyze who's making the decision. Jerome Powell tends to err on the more cautious end, so I would imagine he's going to keep interest rates higher. So that's going to keep dollar strong. But obviously, it's not going to help anything because obviously everything's more expensive. It's a real like happy medium. Simon, do you think war as it goes on for longer will have less of an effect on the markets? No, it's going to have more because the price of oil everyone's going to be watching. I mean, we peaked 120 last week. It wouldn't surprise me if oil has a gap up like this again, and we obviously have a very similar scenario where they're trying to they don't no one wants oil at this price. All right, only the guys who are selling it. But obviously every economy, any company really needs oil to kind of stay around this area here. All right, its happy medium is between 80 to kind of 60. So yeah, but we've also then got the price of gold. We've also then got, euro. How low can obviously euro go? There was a while ago. I think it was during COVID. We got back to a flat €1. Sorry, yeah. Euro was at one. So that's yeah. We've obviously got to be we don't, the longer war goes on, the weaker euro gets. All right, so how low, there's lots of worries. Like I said, stagflation's a, worry where inflation is still high, but growth, slows. All right, so there's lots of worries. But obviously I don't like to say it's good because there is war because it's not good. I'm anti-war. I don't like it. I hate that, it doesn't matter where you are. I hate that 150 schoolgirls have been killed for no reason. They've got no beef with anyone. So I don't like it. But obviously we can because it's going to increase volatility. It also kind of separates the men from the boys because obviously technicals are very tricky if you don't understand fundamentals, and so it makes it makes um it makes it easier for institutions to trade because obviously they understand it. So obviously it makes it easier for us to trade because they understand it, because we are, understand it. So thanks for the analysis, Dan. What TP would you expect for gold? I can't see gold not hitting all-time highs. I mean, anyone who calls anything above an all-time high is kind of making it up because remember, an all-time high is history's all-time high. All right. Actually, this is a good one here. So, if we look at USDJPY here, all right. This is a crazy where it is. If you think about it, it hasn't been at this level since June 24. If this once this breaches 161,500, it hasn't been at that level since 1986. All right. Now, if you think about the yen, how much of an issue, like there's so many potential issues here, like yen exchange, lots of yen for dollars. All right. If it's more expensive, it's a real struggle. There's lots of scenarios that obviously everyone needs to kind of be aware of. Alex, at which point in time are expectations for news events priced in, e.g., CPR and euro, and markets think inflation goes up? Is this affect pricing? I think it's probably already priced in. If we look at euro, euro is tanking. We know that inflation is going to come in hot. We know there's kind of a global, kind of worry here. Not worry, but, expectation. All right. Everyone's going to keep their interest rates high. And you're going to see that this week. Right. No one's going to drop them. It's gone from January where everyone was dropping to then now where everyone's going to be, raising or, so yeah. Greg, in typical times, dollar and gold have an inverse relationship. In the situation we have now, do you think they can move in tandem? Yes, because they're both classed as, safe havens. And we've proved that in this, maybe because obviously oil, everyone buys dollars to buy oil. Oil is priced in dollars, so obviously, potentially that's why, yields are obviously flying, dollars, flying, but we could have gold flying too, because I can't imagine anyone's going to want to, not going to want to hold it. But obviously, again, gold is obviously priced in dollars. So dollar has moved up so quickly that obviously it might become too expensive to buy gold even if you hold it. But we've got to, we're obviously not in these but boardrooms, and obviously these boardrooms are made up of multiple funds. All right. In times like this, times of crisis, they kind of all act accordingly and drive markets in one direction. All we can do is watch what is happening and then, obviously, hopefully understand it as quick as we can, process that information, capitalize on it. Look, our job here is not to worry about what everyone else is doing, right? Our job every day, we've got a plan, is to place trades, take money out of the market, and take today off. Tomorrow goes, place trades, take money out of the market, take today off, and that is our only job. We don't have to worry, and actually, if you act like that, you have a target, a plan, you're going to achieve it, and it's going to be very, very easy. All right, but obviously, it does make trading a little bit boring because it is, well, profitability is boring. So, but it makes you very, very happy. So that's obviously the goal here. Um, so right, Phil, hey up, Dan. Everyone is going to jump on gold. Won't the institutions expect this? So I am kind of yes, I agree. Well, I don't think everyone is going to jump on because I think I think well, I actually heard from a broker the other day that the markets have lost a lot of money from gold over this last kind of couple of weeks, so that's going to leave a bit of a, sour taste in everyone's mouth. I was actually expecting it to be the opposite, but obviously, yes, they have. So yeah, I don't expect a big drive, but what we might see is a bit of trickery here, and see something like this happen where there's a major, spike, bit like what happened here, and then the pump, and so we might, see a major spike. Um, Even if we get down, look, I always have it marked up. This is beginning of year here, all right? Because beginning of the year was around here. We obviously come back, tested it, that held. I think if this one holds, brilliant. But I'm not gonna just buy and hold. I would want to what I would want to do is be in a good position where we're in some good profit. We can pull stops to break even, and then obviously that's where we can really benefit. So yeah. Let's have a look at this one here. You think gold is going to go after the previous varied low on daily and after run it up? I think there's two areas where it could go from. It could go from where it is now, or it could touch the yes yearly low. So, but let's wait and see. Let's wait and see. But yeah, nothing to worry about at all. I'm on it. I'm always on it. I'll explain everything. So obviously, but I do think it's important, for everyone to understand all these different things, that are obviously, moving the, markets. What about BTC? You know, no one knows here. There's lots of liquidations happened. I don't think Bitcoin's a safe haven. I just think it's, yeah, I wouldn't. bet anything on it. At the moment, I do hold a couple of Bitcoin, but obviously I hold them at $30. But even I'm now thinking it's a bit of a waste of time holding them. But yeah, so. Right, have a great rest of the evening. I'm gonna get the kids into bed, and yeah, we're gonna smash it. So I'll be up posting 6:30. We got loads going on, and yeah, we're gonna absolutely smash it. So have a good one, guys. Have a good one.